Hey everyone, welcome back. I'm James, your investing kaki. And today we're going to dive into some exciting stocks on my watch list. So in this video, I'm going to review three stocks that I believe are poised for a comeback. Okay, so here are three stocks that I'm looking at based on three different themes. The first one is the semiconductor recovery. Now that all the inventory levels of the semiconductor chips are reduced, and with all the AI trend taking place, semiconductor chips are up and coming again. The second theme is the robust travel demand post-COVID, where Singapore is already experiencing a lot of traveling around, especially now that Taylor Swift is coming over to Singapore. And then the third one is the increased shipbuilding order book, especially now that oil prices have come to a rather high price and stabilized along that level. All right. So first up on my watch list is none other than Venture Corp. All right. So Venture Corp has experienced a tough year. All right, with all the semiconductor glut, where their clients, their customers, having faced all the over supply issues, they are not willing to take on more work with Venture Corp. So you can see that the past 3 quarters, they are facing a decline in both the revenue and profits. However, the company is hopeful that there will be new product launches going forward and more US or global companies are reallocating to the ASEAN country, especially when you think about it. US and China trade war is going to continue, and the companies who want to have at least a peace of mind, they are coming to ASEAN countries like Vietnam, like Malaysia and all that. Third, the analysts are frantically upgrading Venture Corp's target prices because of the customers' revenue guidance. And you can see over here that Venture Corp has a lot of customers. So a few of them are like Broadcom, Agilion, Fortive, Medtronics, and even the tobacco maker Philip Morris. So they are all guiding for either revenue or EPS growth in the year ahead. So this will bode well for the Venture Corp as a result. And the other positive point, the second positive point is that Venture Corp is stepping up in the share buybacks. While they used to do share buybacks for their employees, right now they are purchasing a lot more shares. So one example is on the 13th of October last year, they actually purchased 100,000 shares at $12. And right now the price is already crossing the $14 mark. And but you can see from this consolidation phase is that a lot of share buybacks have been conducted during this period. Okay, and the third point I want to share is that they are trading at an undemanding around 11 times price to earnings ratio, and they are also a consistent dividend payer. In the past year, all right, even though the results, the earnings have not been so forthcoming and it has been down and declining, they are still paying the same dividends per share of 75 cents. All right. So you can see that even during COVID period where things are murky and uncertain, they are also paying out 75 cents dividend. So this goes to show that Venture Corp has the ability, has the means to pay dividends even during bad times, and they are likely to continue and also maybe increase dividends once the good times are back again. And before we get into the second and the third stock, I would appreciate it if you can help me to smash the like button, subscribe to my channel, and ring the notification bell so you never miss an update on all these stock insights. And in exchange, here's a financial meme for you. Next up, our second stock that will benefit from the travel demand is none other than SATS Group. Alright, so SATS have fallen more than 40% since the WFS acquisition. So this is a Europe company with a similar business model as SATS. That's why the acquisition. All right. So we have already know that the SETS Group has done a rights issue to acquire this big company that's even actually larger than SETS itself. But on the bright side, all right, so Temasek subsidiary Tembutsu, all right, has been acquiring shares in SES Group, bringing its stake up to 40%. So this is a significant or substantial amount, right? 40% belonging to part of Temasek, right? And another positive thing to note is that although the acquisition has resulted in losses, SES Group actually delivered record high revenue as of the trailing 12 months September 2023. Okay, so if you have to take a look at their past 9 to 10 years of financial statements, the trailing 12 months is the highest revenue they have recorded. If you were to say that they can digest all they can get some cost cutting measures to work right with the synergy in place, and they are able to reach the net profit margin of maybe at least 10 to 15%, like pre-COVID period, then that will result in a very significant profit jump going forward. Okay, so you can see from here that they had actually delivered 13.5% profit margin in year 2019. Okay, so on a note, right, about their outlook ahead is that they are positive, right? Because they are getting a lot of new commercial wins. They have done strategic corporate collaborations with many key industry partners, especially in the Europe area because of the acquisition, or even Saudi Arabia, Belgium, you know, and they are also expanding their capacity in different areas like maybe Chicago and Madrid, right? So they can handle more cargo going forward. And our third stock, okay, that will benefit from the increased shipbuilding orders are Marco Polo Marine. Okay, so other than Citrum, there are still a lot of shipping stocks in the market, and one that I do believe or like is Marco Polo Marine. Right. So first off is that there is a improving offshore market, especially for shipbuilders or ship chartering companies like Marco Polo Marine, and this company is benefiting, right? Be it the from the ONG market or the wind energy market. So you have the traditional oil and gas market whereby it will it will grow at a CAGR of 8.5% to reach 195 uh, billion, right, in 2028, as well as the offshore wind energy market, which is growing at an 11% CAGR, compounded annual growth rate, from 2024 to 2029. Okay, so both are growing at a very fast pace, right? So twin growth drivers over here for the company. And they already done a successful turnaround in terms of revenue, profits, or even their balance sheet. So you can see here that their revenue from COVID period is like an all-time low because we all know that there are lockdowns and they cannot drill for oils. There's no need for their services, and that was the worst period. And the company actually had to go and borrow or do a lot of rights issue to just stay afloat. Okay, but since then they have increased their top line sharply. All right, I think 6 to 7 times, and now it is at 71 million as of second half 2023. Operational EBITDA also went from 0.9 million to 43 million. That's 43 times growth. Balance sheet wise, okay, they went into a very deep, I would say, bottomless pit lah, whereby the debt was uh, astonishing, and then they sort of like reverse did some rights issue and they are now net cash, okay, of 60 million. And that's not all, right? So they they also have an optimistic outlook, whereby they are expanding their shipyard operations and also having strong ship chartering growth as well as steady progress in constructing all these vessels to capitalize on the offshore renewable sector. Okay, and the last point I want to share is that the company is in good hands. All right. So over here you can see that the CEO and the CEO's sister, all right, owns a total of around close to 9% stake, and their friend or the the person behind, he's the son of the super group, right, Mr. Teo Jin Xiang, okay, has been also buying the shares of Marco Polo Marine aggressively throughout from May 2023 to 1st December 2023, okay, at the price of around 4.4 cents to 5 cents plus, which is quite close to the current share price if you were to take a look at it. Okay, so with that, this is it for the three stocks poised for a comeback. And there you have it, my three rebound candidates. But do remember to also do your own due diligence. And now I want to hear from you. Which stock do you prefer out of the three? Or do you have another stock that you want me to analyze? With that, if you enjoyed this video, smash that like button and subscribe to my YouTube channel and ring the notification bell so you never miss another update. Next up, don't forget to check out this video on the 7 stocks near 52 weeks low. And I will see you next time. Thanks for watching and ciao.